Welcome to the Bridwell Institute's Fall 2025 Texas Economic Forum, titled From the Stockyards to the Stock Market. My name is Robert Lawson. I'm the director of the Bridwell Institute. Just a little bit about us. We are a research institute in the Cox School of Business. Our mission is to study the nature, causes, and consequences of economic freedom. We do that mainly through our academic research on economic freedom indexes, but we also host 12 reading groups, or 10 reading groups a semester. Several thousand school teachers go through workshops that our institute puts on across the state of Texas. And of course, we put on events like this. This might be our record attendance for a single event, so thank you. I want to acknowledge a few people and organizations, our longtime contributions, partners, the William Armentrout Foundation and Gina and Tucker Bridwell. I also want to thank our on-campus co-sponsor, the Rowling Center for Business Law and Leadership in the Dedman School of Law. Eric Hinton is somewhere. Eric, thank you for your help in bringing all these law people here, too. Appreciate it. We're also appreciative to the Dallas Business Club who reached out, and I think some of you are here because of them, so we're grateful for the Dallas Business Club's joining us, our little party. Our featured sponsor, though, is Regions Bank. I'm a former resident of the great state of Alabama and was once a retail client of that fine bank. When I got here, though, they didn't have enough ATM machines, so I switched, but I think they're working on that. With that, let me introduce Tyra Sanders, the commercial banking leader and market executive for Regions Bank in the DFW market, and I'll let Tyra say a few words about Regions.
Good evening. I'm Todd Sanders. I'm the market exec for Regions Bank, and I'm so thrilled to be here with you and be here at SMU with the Bridwell Institute. They've done a phenomenal job. Tonight, Regions Bank is all about being a part of the Dallas community and making sure it is thriving. Texas is thriving, Dallas is thriving, and I'm so excited to hear about the Texas Stock Exchange, Nicole, and what you have to say. So you're in for a treat. And again, Bob, you and your team, Teffa, and all the folks around, I just really appreciate what you've done to pull it together today, and hopefully you'll enjoy it. So thank you a lot, and thank you for being here tonight.
I want to thank Regions for their financial contribution more than anything else. So next on to our program, I'm pleased to introduce or welcome Alan McKnight, Chief Investment Officer of Regions Bank, as our moderator tonight. In an age of Google and LinkedIn, long introductions seem unnecessary. I will only note that Mr. McKnight earned his MBA from the Little State University down in Austin. Our featured speaker is Nicole Chambers, the Global Managing Director of the Texas Stock Exchange. Nicole, unlike Alan, had the good sense to attend SMU. But she had the poor sense not to go to Cox. She majored in economics and sociology at the Dedman College. So the agenda tonight is to let Alan and Nicole discuss this exciting new Texas Stock Exchange for about 40-ish minutes or so. We'll reserve some time for Q&A, and then we will go to dinner. At least we're going to go to dinner. You guys go wherever you're going to go. All right, take it away, Alan.
I'm a little worried, Bob, since you said it's everybody. It's all on Regions' dime. And I know, and I'm confident that you all are here. You're here to hear Nicole, because a few years ago I was coming back from an interview. I do a lot of Bloomberg and CNBC, that kind of stuff. And I came home, and I have 3 daughters. My wife and I are blessed with 3 girls. And walked in the door feeling very proud of myself. And I came in and said, "Did you see Daddy on TV today?" There's kind of a pause, and our middle girl, who is the voice of reason at all times, said, "We did. Why were you on?" So I'm thinking, oh, let me tell you why I'm on. So I go into this launch, markets, economy, this and that. I finish, and she's still nodding. She says, "No, I know that, but why you?" To which my wife had to leave the room. She was laughing so hard. So I know for certain that Nicole is the primary speaker here. But we're just excited to be here, excited to be a part of this discussion. And it's really exciting when you think about the Texas Stock Exchange and what it's achieving and what it's going to do for the Texas economy and the goals associated with the company. And as much as it is a new entity, when you think back to stock exchanges, the first stock exchange was created back in 1602, the Amsterdam Stock Exchange. And then a few short years, almost 190 later, the New York Stock Exchange, the NASDAQ in 1971. So we have a history of stock exchange being created with the primary goal really being able to deliver capital, to be able to put companies in the right position for the long term. So while it may be a new endeavor, it's really only new for Texas right now, not new to the world stage, which is pretty exciting. So given that scenario, Nicole, how do you see the Texas Stock Exchange differentiating itself versus competitors such as the NASDAQ and the NYSE?
Absolutely, and thank you. And just to know, my daughter is very unimpressed by my job, so it was clearly
Join
our
the club.
children's problems. If you think about the landscape today in the U.S., we live in a country with the most envied markets in the world, the best investment opportunity, a chance to change your life, a chance to grow your business. But unfortunately, it's being underutilized. We are seeing an all-time low of companies that remain public. Since the mid-90s, it's almost a decrease by nearly 45%. So we're at about 4,400 public companies today. Juxtaposition that, there are 2.5 times more PE-backed companies in the U.S. than public. What does that mean? Private capital is rampant, and it seems to be a better option, unfortunately, or fortunately, depending upon how you look at it. Beyond that, we've seen an inconsistent IPO market. While we're hoping to start to see some consistency come back, we're seeing them stay private for a very long time, to the point that when they do go public, they're very large. And it takes away the opportunity for a retail investor to get involved in the market. If you think about it, when Amazon or Google went public, Walmart even, you could change your whole family's life with that investment. And that's really been removed from the market. So we, at the Texas Stock Exchange, or as we'll refer to it as TXSE kind of going forward, but ultimately we're here to revitalize a really complacent listings industry. Under the duopoly that's there today, it's under their watch that we've seen this decline in companies that have wanted to go public or stay public. And why is that? It's incredibly expensive. It's a lot of risk. There's a lot of disclosure and time and work that goes into that. It's not all their fault, but a lot of it can be blamed on the exchanges being an overreach and a regulator of companies. So for us, the best place to challenge New York is Texas. We believe here in this state, just as we all live and work and breathe, that you should be able to work and do the business you need to do that's right for your family, that's right for your shareholders, that's right for your employees without the red tape. We have a very pro-business, proudly pro-business mentality with our Texas leadership that's allowed us to get to this point to attract talent and companies from all over the U.S. into Texas. And Dallas really has become the new center of gravity. So for us, we have a chance to really offer companies an alternative to what's been out there, which is pro-business. Let's work for you on your behalf to reduce the cost of being public by removing the red tape. And ultimately, how can we allow companies to make a choice between private and public that is the same opportunity cost? So for us, it's truly a competition factor.
Well, I think to that end, when you look at the relocations over the past decade, there have been 300 plus relocations of corporate headquarters to Texas in the past decade, which is by far the largest number of any state in the union. And it really speaks to your point, which is when you put a favorable business environment in place, it propels that desire and that interest. And then from there, it's how do you then support that ecosystem over the long term? Texas today is the 8th largest global economy. If you were to stack it up as a country, that's where it would shake out, only behind in the United States, California. And as we know, there's been a lot of departures from California, and Texas has received the lion's share of those. So I think that really sets up well when you think about the ecosystem that Texas is really working to. So 8th largest economy, 300 plus relocations, $2.8 trillion economy in Texas. So what do you see as the opportunity set really in terms of growing the economic strength, attracting listings, investment, compared to some of the others, and really just in and of itself?
Sure. I mean, just a couple additional stats, which we don't think we need anymore, but I think just to, again, reference where we're at, Texas has 1 in 10 public companies headquartered here. 52 of the Fortune 500. We have more financial professionals that live and work in Texas than the state of New York. It's really shifted. We have a push out of New York, a push out of New Jersey and Illinois and California, and a pull into Texas and the Southeast quadrant. So not only is Texas obviously thriving and growing, but so is the entire Southeast region, which obviously Regions is a part of. It accounts for all GDP and population growth in the U.S. over the last 5 years. So really, we are seeing things change. Money is no longer, you no longer have to live and work where money is based. Money is decentralized. You can work and live wherever you want to be to accomplish the job you want to accomplish. No longer do you have to be on the floor of the New York Stock Exchange to get a trade done. That is antiquated. Everything is done in data centers in New Jersey. We truly are looking at this as a chance to really update how companies do business, and that is truly how they work with their exchange. What's really going to set the Texas Stock Exchange apart is, again, looking at getting out of the way. We don't believe we should tell you how to run your business. We don't believe that an exchange should be an additional cost center, other than obviously being a listing and conduit to the public markets that you have to abide by and following the SEC. Our job is to advocate for you and unwind that red tape and, again, look at reducing cost. We've already done that, and we're not even open for business. So if you think about this most recent session in the Texas legislature, we're proud to write and sponsor a capital markets package that immediately went into effect as it was passed with bipartisan support, which allows companies an alternative to Delaware. Delaware, as we've seen, is an unfriendly business environment. We unfortunately have had to watch, many companies go through quite a lot of time and money in fighting the fight to just do business the way that they should be doing business. So our Texas leadership has seen that in order to kind of cement Texas as a truly pro-business environment, we need to sharpen and upscale the Texas business courts. So this Texas capital markets package allowed a few things. First, if you re-domicile and incorporate in the state of Texas, and or either headquarter or list on a Texas exchange. Gosh, we're talking about a lot of X's. Sorry, I'm going to start to have a lisp here pretty soon. Ultimately, that allows a few things. Number one, it codifies the business judgment rule. So having the codification of the business judgment rule allows for litigation risk of directors and officers to be removed at a really extensive rate. So essentially, it allows your D&O insurance premiums to go down. If you're a biotech, if you're an energy company, if you're in an industry that already has to carry a high premium for your D&O, immediately that can be relieved. The second piece of it is upping the proxy and shareholder proposal threshold to 3%. We believe if you're going to bring forward a shareholder proposal, which you certainly can, you should have a bit of skin in the game. You should not be a single fractional shareholder that's going to create a ton of time and burden and noise for a board and a management team. You now would need to own 3% of the company for 6 months and solicit 2/3 of the shareholder base. That will allow true, meaningful proposals to be made forward and the time and effort to be spent on those types of proposals. So without us even being open for business, I spent 17 years at NASDAQ. As was said, we never did this type of work for companies. It's easy to say you do, but our job is to walk the walk. And those are just examples of what we're going to do at the federal and SEC level as well.
So given that and your comments at the outset regarding the lack of public companies right now, we're basically 2/3 of where we were 25 years ago. We're having fewer companies go public as well. What industries and sectors are you all focused on, and where do you think the greatest opportunity is for those sectors and industries in terms of where TXSE fits?
Well, the short answer is everyone. The longer answer is, we see this as a chance to really, again, we're homegrown in Texas. We have the ethos of the Southeast quadrant, but we are not bound by this region. We are a national exchange with global ambitions. So for us, we are looking at companies of all industries, of all locations. Geography does not matter to us. But for us, as you could imagine, this interest really comes from companies that have been undervoiced and underrepresented. Not everybody is a Mag 7. Mm-hmm. Not everybody can have the voice that Walmart or Tesla or Facebook or Meta, I should say, have. So now we need to really pay attention to the small to mid-cap companies. Those are the companies that are growing jobs. They're the companies that need the most support, that have the lower budgets, that don't have the 100+ legal team that, these large companies have. So for us, it's about building an exchange for issuers, by issuers, taking into account that mid-cap company. So anywhere between 900 million to 25 billion, those companies just don't feel like they have a voice, unfortunately. So we really are trying to make sure that we are building an exchange that will fit everybody, but specifically listen to those companies that need the most support.
And do you think that's more in the primary market or the secondary market, or both?
Both.
All comers, yeah.
All. So for us, the only really truly piece that's going to set the bar is that we are going to have high standards. So, we do want to encourage companies to go public, but we need quality companies, right? I think the market right now is a bit ridden with companies trading below $1 for an exorbitant amount of time, or Chinese-based companies that are not following U.S. financial standards, or even shell companies. And we believe that those should not be in the market. They are creating negative investor sentiment. It's, again, creating maybe a perception that those companies, or companies that are even within the potential range of that, shouldn't be public. So we are going to have high standards. We want to signal to the market that if you list on the Texas Stock Exchange, this is a quality company. But beyond that, we will get out of the way. So to answer in a very long-winded way, the minimum threshold will be a 200 million market cap.
Yeah. Well, it's impressive, because I was just with a good friend who has been an analyst for many years on the sell side, just meaning that he covers companies, and small companies, mid-cap companies. And he said there really isn't a job for him any longer, because there's so few of them today, and the research on them is not worthwhile and valuable to a lot of investors any longer. But part of it is because they're just not coming to market. So if the investment banks aren't going to be a part of that, or not finding the right exchanges, then it's a zero-sum game. It's just going to go away. So within all of that is this underlying technology theme, and you and I were talking about this at the outset. But technology is changing everything. Mm-hmm. So when you think about what TXSE can provide from a transparency, from a fairness, cost perspective, what does that look like? And again, how is that different than, say, NASDAQ or NYSE? A lot of these other competitors who have been doing it for a very long time, in terms of driving from a technological perspective.
So the reason why the U.S. markets are so liquid and so desirable is because of the investor transparency. So we are certainly building an exchange that offers that transparency. I will say, to be a disruptor, we had to create our own technology. We could have just white labeled and bought somebody else's and put the TXSE label on it, but that's really not the way to change things. So of the 8 coders alive that could build an exchange, we have 4 of them working for us. There is 800 years of exchange experience working for the Texas Stock Exchange with less than 70 employees. This has been a team purpose-built for this exact reason. We have a chance to rethink how business and specifically trading can be done. These are the people that built the NASDAQ technology back 20 years ago, 30 years ago. We have a chance to be as competitive, if not more competitive, than the fastest market out there, which is NASDAQ today. We have tremendous relationships with Michael Dell, and leveraging new hardware and being first to market with that will be key for us. So we absolutely intend not only to build a market that is ready for today's investor, but for tomorrow. We are hearing all about blockchain and digital assets and potential tokenization. We will see how that rolls out, but we are ready for that. And we are building for the future, because eventually that's where things are going to go. And we need to be nimble, and that is exactly what we are doing. So technology is at the heart of what we are. Again, as I said, all exchanges trade in data centers, so we have to be in the data center in Secaucus, just from a latency perspective. We don't want to be the slowest. We can't be. Otherwise, you don't get any trading on your exchange. So we will be in New York, but our backup data centers are here in Dallas and North Texas. They're already up and running. And the way things are going, especially with this mayoral race in New York, we might see all exchanges move here at some point. So you never know. I get asked frequently if I'm the largest contributor to Mandami, and I am not.
Yeah, the hidden funder there in terms of getting a move on.
Exactly.
And maybe to that end, where do you see, above and beyond what you all are doing, but just around that technology, because how much faster can it get? Because I think that's been a common theme for investors now, is how can you trade any faster than what already seemingly instantaneous? Any thoughts there in terms of where it goes?
I mean, other than instantaneous settlement, which is
Yeah.
eventually where we will get to, I mean, what it can do is not only allow for faster trading, but it's going to just ultimately get cheaper and cheaper and cheaper. And for us to participate, we're going to have to pay to play. So as you think about attracting liquidity and traders to our market, we will have to have extreme rebates to allow traders to feel comfortable in leveraging our technology and coming to us. While there's only 2 exchanges to actually list on in the US, there are over 15 exchanges to trade on. So if you think about it, on any given day, if you are Regions Bank, your home exchange, New York, NASDAQ, New York, is essentially trading less than 20% of your volume, probably more like 15%. So you're paying the New York Stock Exchange a hefty fee, you're abiding by their rules, and you're only trading 15% on their market. So that means 85+% in your daily trading is traded on multiple other lit and dark exchanges. We believe that we can create a faster, more transparent market by allowing people to come to TXSE intraday. So that's going to be our focus, not just the open and close, but intraday. We want companies' stock to trade on the company, on the exchange that they pay for and that they abide by.
Interesting. Maybe could you speak a little about the dark exchange? I mean, in terms of just for everyone here, when you talk about that, what that really means? Because I think a lot of people hear, we read a lot about it. You hear about a host of different comments about it, but.
So dark pools essentially were created really for Warren Buffett. That's how it kind of all got started, right? So when Warren Buffett would want to make a block trade, a buy or a sell, because of who he is and the magnitude of his buys and sells, it would affect the entire market. So the SEC essentially worked with, and keep me honest here,
Yeah,
the SEC
sure.
worked with him on creating a dark, so an unlit location for him to be able to make his trade so that the entire market was not interrupted by the fact that Warren Buffett was placing, a very large block trade. Well, those dark pools have started to open up, so it's essentially like a private room to buy and sell that nobody else can see. Now that's less used for Warren Buffett and more used for high frequency and hedge fund traders. But essentially you don't see what's happening in that room. They open and close the door, they make the buy and sell, and you don't know what necessarily happened. Versus on a lit exchange like NASDAQ or New York or a SIBO or BATS, those trades are made on a lit market, meaning you see there's a broker seller and a broker buyer, and then that block amount is shown. So the dark pools came out of potentially a good reason, but have essentially become not a hindrance, but a difficult place for companies to understand how their stock is trading.
That's exactly right. And when you think about the essence of an exchange of being price discovery, it's very difficult if you have off-market transactions going on. If you're an institutional investor and you're trying to discern, okay, what's the range here, what's the bid ask, and then something gets done somewhere else, very hard, particularly when it's done as quickly. To your point now, it was done maybe for a good reason, but now we've really transitioned over for these really large, high-frequency traders. So it can have a material impact, which can create more volatility and a lack of real understanding and knowledge of where some of the volume is and really who is behind a lot of the decision making. So we're talking about liquidity. Warren Buffett has a wonderful line, you don't know who's swimming naked until the tide goes out. So as you mentioned, liquidity is critical. And when you think about liquidity, what's TXSE's strategy to really build and sustain liquidity, particularly as a new player in the marketplace?
Well, I guess good or bad news, I'm not sure. I left a career to start a startup, so I don't know if I'm talking myself into this as a good idea, but we've seen a lot of failed exchanges. We've seen several exchanges attempt to come to market and not thrive, whether it be especially from a listing perspective. So IEX or MEMX or even the long-term stock exchange. Now, granted, their focus was not on corporate listings. It was more around trading and kind of taking advantage of some of the Flash Boys, commentary that was coming about in the mid 2010s-ish or so. But we could learn a lot. So first and foremost, you have to be a fast trader. So that speed bump the IEX implemented was a terrible idea. We would never do that. But for us, my job, just to give you an example, is to attract corporates to come to list with us. So a Regions or a Walmart or XYZ foreign company. But my counterpart is attracting traders and banks. So those relationships are happening now. We have been speaking and working with these liquidity makers for the last year and a half. Not only are we speaking with them and getting them confident with what we're building, but they're also investors of ours. We've been very strategic and thoughtful about creating an investor at a cap table that incorporates not only the largest active, passive, and retail, so Citadel, BlackRock, and Charles Schwab are our main institutional investors, but also every major liquidity provider in the market is an investor as well. So it is purposeful in that we having them have skin in the game is important. Finishing off on the capital piece, though, I will say a majority, 80% of our capital that's been raised to date is from private wealth and private money. So we have patient capital, we have a long runway, and we have a chance to really get this right.
Yeah, well, maybe in that vein, you have this long runway. If you were to break out the crystal ball and think about where do you see TXSE in 10 years, what does that look like? And you've already mentioned some of those items like tokenization and some of the other really technological innovations that are going on. So speak a little about the future.
I think a few things. First, for the broader public markets, I hope we take that number from 4,400 and move that up a bit, and that showcases companies that have gone public. So really showing that we can make a difference in making going public attractive again. And a tangible decrease in being public. So not only whether it be in the state of Texas with reincorporation, but with the SEC and unwinding some of the burdensome disclosures that have been put forth in previous administrations, or with the federal government that is out there that is creating a bottleneck in companies going public. So for us, if we can truly show that there has been real change that's happened, or is it on, working with proxy advisors and making them be more transparent so that they have as much to, share as a public company does. We certainly see that the Texas Stock Exchange will gain market share. And we are excited, not just from a trading perspective, but from a public company perspective. Right now, it's a duopoly, so it's 50-50, right? Ultimately, you're going to win one, hopefully. But, for us, we're really excited to bring that competition in. For Dallas, for everybody in this room, what we see, we will have our Texas Market Center open by that point. We will have it open in 2027. We are building an actual physical location, a headquarters for the Texas Stock Exchange that will have the visibility aspect. We'll have the bell, possibly a cannon, maybe a bull, I don't know. You will see. The event space, the boardrooms, the analyst space, a Texas Business Museum. We want to highlight the innovations and the great ideas that have come out of the state, whether it's from Spindletop to Gigafactory and all in between and what's to come. Those companies need to be celebrated. And we want to celebrate the next generation of companies that go public. So for us, having a physical location not only will be tremendous, I think, for companies, but for the city of Dallas. And that will just allow more, from to opposite yours, all boats will rise with the tide that come in from that.
Right, and so I want to revisit a topic from earlier regarding regulation, because it goes hand in hand with this. So obviously, I had the good fortune last week of doing a fireside chat with Jonathan Gould, who's the comptroller of the currency, and he was remarking about how he would like to see less regulation, more business friendly. What are you seeing on that side? You mentioned the state earlier, but what are you seeing at a national level in terms of the ability and really the benefit to TXSE of the regulatory landscape and where it's going?
Absolutely. I think we are incredibly encouraged. I mean, politics aside, this administration and specifically this commissioner with the SEC, Atkins, is incredibly focused on exactly the same thing we are, which is how can we get out of the way? What is causing companies, to stay private for so long? What is burdensome? Where can we be working together? So I will say, working with the SEC, not just in getting our Form 1 across the line over 2 weeks ago that was approved, but actually they're very keen to hear what we've learned. The New York Stock Exchange and the NASDAQ, they have had a chance to do this for 230 years, and we haven't seen them do much. So we're really, leading the charge with this new SEC and really excited. We've also hired a lot of former SEC commissioners. So we also know what the red tape internally looks like so that we can get past that as quickly as possible. But I think from a true business perspective, and we are at the best place we could be to allow all this change to happen.
Fantastic. Well, maybe with that, we'd love to open it up for some questions. I'm sure your question will be much better than mine. But I believe we have mics up. So please, if you would like to, I don't know if we're going to grab the mic or you can just come right on over. I'm not sure.
So my question is about AI. So what are you doing in terms of, to say that majority of the people here, either through a proxy company application that can, where your company TXSE would be able to support AI. What are we doing with that? And then, generally speaking, my name is Raj Sigamani. I work for a blockchain company that helps in shipping and logistics. So I'm looking from a blockchain perspective, how exactly you would be different from the other exchanges, where we are going, where we are today, and where we are going.
Absolutely. So if you think about AI, it's not new to trading. What are all these high frequency traders and algorithmic traders been doing the last several years? Using AI essentially. So it's not a new concept for trading. From a technology and use of AI, for us, absolutely, if it can make our jobs easier and more efficient to allow the application process to go smoother, to check through compliance, to remove some of the reporting needs that a company needs to proactively do, and we can pull that in, absolutely. I think AI will be tremendous, but it also can't change what is, we have to still go through a due diligence process. As an exchange specifically, we can't pick winners or losers, right? We can only make sure that they're following the letter of the law when it comes to being public and abiding by those guidelines. We will always have to have compliance, and that will always have to have an override, whether it be AI first and then human or vice versa. So absolutely. I mean, I work essentially for a tech company, and they're all focused on AI. So it's certainly something that's always in our mind. But from a blockchain perspective, I will say that we're building for it, but that is not our initial focus. We want to get it right for corporate listings. Corporate listings is the business that we are in, so is exchange traded products. Right now, there's not a huge appetite for blockchain from corporates. There are some, obviously, in this room, and there's a lot of people that are interested in what blockchain can do, but we're not hearing it from the institutional investors, and we're certainly not hearing it from corporates. So until the mindset changes and there are some guardrails put up that all exchanges agree to abide by, and the settlement process, which will be instantaneous, gets essentially, blessed and approved, we are going to continue to trade as we have electronically. But when it comes out, we will be ready for it.
And I'll just add, when you think about the institutional investor community, they have been pushing the envelope in terms of, while it may not have been considered AI, the ability to promote high-frequency trading. Probably the most successful hedge fund of all time, Jim Simon's Renaissance Technology, was at the forefront of that. My father-in-law actually worked for him 50 years ago. And so you think about the work coming out of a math doctorate. They've been pushing into this for a very long time. So now I think we're just getting the other side of that trade, which is more on the corporate listing sides, and how do we meet them where they are on the tip of the spear in terms of leveling up with that technology.
As a sidebar, obviously my background's in trading, and we did our first algorithmic trading right here at SMU 100 years ago when I was younger. So when you mentioned something, you talked about the tokenization of assets and things like that, and we're seeing a lot of people move in that direction, which I've done myself. I guess the question becomes, when you think about what you guys are doing as far as compliance is concerned, dealing with the Howey test as far as security is concerned, do you foresee kind of a duopoly when it comes to that sort of thing, where you have a DEX type system where you guys do in addition to the regular trading?
I think what we're hearing and what we're seeing is that, yes, there will probably be a dual listing of the tokenized asset. So, a stock will continue to trade as they normally would, and that would probably be a bulk of their trading to begin with, but then they would list essentially a second listing for that tokenized security, maybe just to start kind of dipping their toe in the water, but also see how successful that actual program is for a company. So, I think that will be how we initially kind of prepare ourselves and pose it to companies. But I will say, and maybe this is just, again, the audience I speak to, which is mainly CEOs, CFOs, and board of directors, not a single solitary one of them wants that. So, for now, until the institutional comes asking for it, we will not see it come from a corporate.
You talked about the Texas Exchange encouraging small cap or medium cap companies to go public. I'm wondering if the Texas Exchange will represent an opportunity for the smaller investor to participate. My perception is that technology has basically given all the advantage to institutional investors, and so what can the Texas Exchange do for smaller investors?
Sure. Well, having Charles Schwab as an investor helps, and having us understand how retail can get involved, for sure. I think for us, the benefit in having a company go public sooner, or at an earlier stage, I should say, is to allow a retail to actually have the monetary ability to invest in that company. Our technology, if you were to go into, E-Trade today or your TD Ameritrade account and make that trade, that's essentially not even going over the New York or NASDAQ or even the SIBO exchanges at this point. So it doesn't necessarily trade over a technical exchange. It's going to just happen, instantaneously, but really not touch the lit exchanges in that respect. So for us, it's not going to be so much about how you access us. It's going to be how you can access companies going sooner, and then to have that opportunity to invest in a smaller private company that's going public at maybe $1 billion or $2 billion versus waiting until they're $32 billion. Yes, sir.
Good evening. My name is Ray Fajardo. Thank you for taking the time to share your thoughts and experience on the Texas Stock Exchange. I know I'm very excited about it. But given the events that happened last week on Friday and the stock market dropped due to the tariff scares, that it appears to force President Trump and Chairman Ping to backtrack, do you think we are in an AI bubble? If so, what effects does that have on us, the Texas Stock Exchange?
I think you're better to answer this than I am.
That's what we call in Texas the quick kick. I think the reality is that stocks and markets more broadly are reacting much more quickly to any sort of news, regardless of whether it was the discussion about tariffs, whether it's geopolitical concerns, you name it. And I think those days are here to stay. I just think the reality is that because we're pushing closer and closer to a 24/7 type of trading market environment, and the ability and access to capital and trading, we're never going back on that. So our view is that we're not in an AI bubble, but what we're going to see is something akin to what we saw back in the 2000 to 2003 timeframe, which is there are going to be some huge winners, but there are also going to be some losers. I think it's be almost this binary tale of two cities, if you will, between the winners and the losers. That's why so many of the hyperscalers are spending so much right now. I would question whether a company like Oracle, who reported earnings a few weeks ago and the stock went up by 40% in a day, you'd be hard-pressed to explain to me how a company is worth 40% more in any given day, regardless of a huge contract with OpenAI. And yet, the fundamental technology that's associated with that, the fundamental benefits to productivity and efficiency are clearly there. So it's really a matter of some of the overspend and then who is really seated at the table at the end of all this. But I think there will certainly be some losers from that, and that's where you're going to get this big bifurcation in terms of who's left. Thank you.
Yeah, whatever you said. That sounds good.
This is my question for Nicole. So your competitors, NYSE and NASDAQ, developed index businesses to support listings. Does the Texas Stock Exchange intend to do the same or partner with another firm?
Great question. Yes, the NASDAQ index business is a tremendous moneymaker and a huge attraction. So if you think about the QQQs, so second to the S&P 500, the NASDAQ 100 is the second most followed index in the world. That was a huge attraction. So it allowed companies to move in between exchanges because they wanted access. Essentially, if you became in the QQQs, you get a top 10 shareholder. Yes, the answer is yes. We will be, and we have our own in-house digital team that is creating indices as we speak. And we will start to launch that even before you start to see corporate listings. So absolutely, we're excited about it. And if you have any ideas, let us know.
I may have some.
Okay, yeah, please come find me.
What you've seen thus far is that, between the new indices coupled with exchange-traded funds that are providing opportunities to build better and more differentiated products across the institutional spectrum. It's really a broad institutional framework rather than even just for retail.
And I think just to recognize that ETPs, so exchange-traded products, will be a $30 trillion industry by 2030. It's only going to increase, and the visibility from an index perspective will be huge.
Yeah, and it just reinforces the trading capabilities and opportunities and moving away from mutual funds and other fund structures and trying to get more transparency and efficiency in the trading process.
Hi, thank you for taking my questions today. I have two, if that's okay. Sorry, I know there's a little bit of
You are allowed.
That's right.
What is your perspective on how potential reductions in SEC reporting requirements? I think Trump 1.0 talked about making it twice a year, semi-annually, instead of the required quarterlies, and that kind of simmered out. I feel like discussion recently has come back up. You mentioned the regulatory kind of removing the red tape, but you also want to keep the trust there, especially for people without the opportunity to enter the big market caps, et cetera. Would this be a tailwind or a headwind?
To be honest, this is Nicole speaking, not the Texas Stock Exchange. That's not going to make a difference. I've not met one single private company that says, I don't want to do 4 earnings calls. They just don't want to do earnings calls, right? So I think that's the number one thing. The second thing is the street is used to 4 times a year. If they could have more, they would have more. It's going to be really difficult to go back to 2 times or less than that, or even 3 times a year, because they're going to demand information. They're going to be trying to get that information out of an executive. There's going to be a disclosure regardless if you do the earnings. The second piece of it you have to think about is the risk. How do you handle non-material information that's happening in between earnings at that point? How do you handle insider trading at that point? You have all these trading policies and blackout periods around earnings. Now, when do you do that? And it's limited. And then the third or fourth point, I can't even keep track, is volatility around earnings is already so great. If you wait until you do 2 a year, the pent-up volatility would be tremendous and be a real detractor. Of the companies I speak with, which are ranging from, $2 trillion in market cap down to $100 million in market cap that are aspirational to list with us, none of them have said that would make a difference. And they would still do quarterly earnings because they're still going to have to do something. So I think it's a great headline, personally. I don't think it's going to make a difference. I think we'd better unwind Sarbanes-Oxley before we do anything else at that point.
I would be interested to get your perspective on unwinding Sarbanes-Oxley, but that might be too long of a.
Come find me.
time
I don't have
tonight, so
time,
let's
sorry.
unpack that.
And you need a different brain in here to do that, so yeah.
The second is a little bit unrelated. Appreciate this is a Texas Stock Exchange, but separately, the New York Stock Exchange is making a regional Texas office, and they said they're going to list Trump Media as their first company. You often mention that TXSE is a competitor to the New York Stock Exchange, although there's the option to dual list. Do you have any comments towards the building of the New York Stock Exchange Texas branch?
We're glad they found Texas. Welcome. It's super affirming that we're doing the right thing. We welcome the competition. Again, if we can make it easier for a corporate to do business, whether you're on New York, NASDAQ, or TXSE, we're doing our job. A couple things to note about the New York Stock Exchange Texas. It's an East Coast outpost in Texas. You still abide by New York regulation, New York cost, and the unpredictability that comes with it. The second piece about the New York Stock Exchange Texas is there's no trading that happens there. So you can't primarily list there. It's a complete dual listing paper exchange at that point. So in order to take advantage of the legislation that we helped pass, they opened up NYSE Texas. They see this as a regional exchange. We see this as a global exchange. So while it is affirming and we are happy to have the competition, it is not apples to apples. Our apples to apples would be with the New York Stock Exchange and TXSE, not New York Stock Exchange Texas and NASDAQ and TXSE. If that helps, you're welcome. Yes, sir.
Speaking as a law student, you mentioned earlier this desire that Texas can help build up the business courts. My question is sort of twofold. The first aspect being, do you think that opening the Texas Stock Exchange will cause sort of a surge of litigation involving companies opening up? And the second aspect of that, what role do you think, if any, will TXSE have in sort of guiding smaller companies as they're going public in navigating some of the legal issues with that?
So I think the benefit, again, if you incorporate, especially private, if you try to change your incorporation as a public company, you certainly can. And we're seeing companies like Dillard's and Meta and SpaceX, or not SpaceX, Tesla do it all the time. So this is not an uncommon thing, but it's a shareholder vote at that point. So certainly to change your domicile to Texas is better to be done as a private company. We are moving our domicile from Delaware to Texas as we speak. We just had to wait for our Form 1 to be approved. But that immediately reduces litigation. So we're hoping that if you are listed on a Texas exchange and incorporated here, your risk for litigation goes down. So I think as a corporate attorney that does litigation, maybe your hours won't be as great. So maybe, sorry, not sorry.
I'm a law student.
Okay. No, absolutely. And I think, so maybe you get into the incorporation document attorney job. I don't know what that's actually called, but that would be a great job. No, I think for us, we're hoping that it reduces litigation, and we're hoping that it, again, allows companies to focus on doing business and doing what they need to do to be successful. The second piece of it is we can't guide companies. We can't make somebody go public. We can't tell them what to do with their business. We are agnostic to all of that. All we can do is be their exchange of choice and help them through the process to list on us. It's, just again, as I said, we can't pick a horse in any race. I can't invest in any public company. It's very sad. Don't ask me who, because I can't tell you. Ultimately, it's really just there to be an advocate and a conduit, but nothing other than that.
Thank you.
Yes, sir.
Hi, Jasper Cannon, venture partner at MedStarter. So Texas has never been about being second place. So how do we make sure the Texas Stock Exchange isn't seen that way either? From your perspective, what will make founders and other high growth companies want to list in the best state in the union?
That's a great question, Jasper. Thank you so much.
I love Texas.
I mean, for us, we believe this exchange, while is built for everybody, is built exactly for a CEO, founder, entrepreneur. Somebody that doesn't want to give up control of their business, somebody that doesn't want to be told how to run their business, somebody that wants access to have currency to do M&A or grow their company in the best way possible and the cheapest capital possible. So we believe of all companies that would be of interest of us, would be a company just like that. So it's going to be on me and my team to evangelize that to companies across the entire U.S. and publicly and globally. But I think more importantly, we can't lose what we've already done here. We have had this great Texas miracle for the last several decades that is a great tailwind for us. We can't lose that. We have to make sure the infrastructure continues, that we have power grid, accessibility, that water is available. We have all these AI data centers going up and about all across the state. We have to be able to compete and make sure that we have access to all of that. We can't slip. And the second piece is we also have to remain affordable. We can't outprice California or New York just because we have an influx of population coming in. So I think it's continuing that growth mentality, that culture that we've created here already, and making sure that we all work toward that, and the next generation works toward that as well.
Thank you.
Thank you. Yes, sir.
Hello, appreciate you all coming out today. My question is pertains to the growing alternative to going public, that being private equity. So in August, Trump signed an executive order to allow 401ks to be able to access capital to private equity. So how do you think the growing liquidity within the private markets due to this executive order will potentially impact going public and even needing a Texas Stock Exchange in the future?
Yeah, I mean, I think the starting point is one that we've seen companies staying private for longer already. So this is really just an extension of what we've already experienced over the last decade. And it's for a couple reasons. One, because private equity and private capital programs have gotten so much larger than they used to be. When I started in the business 30 years ago, you had a few large players, but then the vast majority of private equity were middle market funds, mid-sized. Now you have these behemoths, multiple $1 billion, who are going out, and so they don't feel compelled to take companies public the way that they once did. Now, in that same breath, I'll tell you that they still want to monetize those investments. So there's still a very deep desire. Don't think for a second that they don't want to actually realize those investments. That's why the secondaries market has been so strong, because in a way they're able to monetize it by basically trading it with another private capital program. But at the end of the day, they're going to realize a far greater value by taking it public. So it's really not an if, it's a when. And so I think even though they will go, you will see the opportunity to invest in more private capital firms and funds, there's still going to be a desire to be able to realize those in private investments.
And we're not here to take away or compete with PE. We're here as a complementary option, right? We should have equal weighting in both. And yes, I mean, I think PE is welcoming what we're coming to do, because if it allows a company to say, yeah, I'll go public, great. I don't have to sell you to the next PE shop and have to maybe not realize the cost that we've put into you.
Appreciate it.
Yes, sir.
Thank you guys for coming here to start. I had a question, both of you could answer. How does the limited publicly available information on small cap firms affect the ability of institutional investors to capitalize on inefficiencies, and where does that leave regular investors like us?
It's a real problem. I alluded to it earlier with a friend who's been covering small and micro-cap, mid-cap companies for decades, and the reality is that there are fewer and fewer investment banks that have a need for his services, and so there are also fewer and fewer investors that can manage that. And as markets have gotten larger and funds have gotten larger, the impact of any one stock is de minimis. So if you have a small cap company, you have a $100 million company, and you take a 5% position in it, well, that's only $5 million. And if you're running a $1 billion fund, it's a rounding error in terms of the impact to your return. In addition, you have a fear of getting stuck in that name. And so I think there's going to be this middle ground where with better transparency and price discovery, you might be able to assist in that. I mean, I'm hopeful for that because I think that it's one of the few places left where you can find some inefficiencies in the marketplace, but we just haven't had as many of those companies going public, and there hasn't been an incentive on the sell side of things to really promote them.
And it's terrible because those companies need the most promotion. They don't have the bandwidth. The CFO is the IRO. They're the ones having to do all of that. If you think about like Texas Instruments, they have 55 sell side covering analysts. I mean, at what point, it's too many mouths to feed, right? But it's not a profitable business.
Right.
If you think, though, about what we're seeing at Texas Capital Bank, so what Rob Holmes has done is he's transformed the bank into being more of an investment banking focused. His goal is to represent all Texas companies in that small to mid-cap range and give them a research analyst or a sell-sider essentially to help them with that. Now, that's right now just in the state of Texas and just for a very specific amount of companies. But, I mean, we're hopeful that might be an industry or a niche that other people start to pick up too. But for now, it's a really difficult spot.
And to that end, one of the challenges is there just are fewer firms doing it. I mean, there's a firm here, Rauscher Pierce, that was here for literally decades. You have Equitable, J.C. Brown, all these names, these smaller investment banks that used to trade in those names, bring them public, work with the exchanges to make that work. And they've been acquired or retired.
Thank you.
Thank
yes,
you.
Sir.
Hi, my name is Vic. Actually, I have a question. So you talked about bringing liquidity into the markets, and I know all the traders want to trade where the markets are super liquid. So how do you bring liquidity, and how do you manage the arbitrage? Like a couple of exchanges, there's like penny-wise differences here and there when you trade the markets, and when you see like the ICE, and there's like a bunch of other exchanges when you want to route your orders when you place a trade. So how do you avoid the arbitrage? And they're also talking about like a 24/7 market opening with 0 DT on all pretty much Max 7 and SPX and QQQ. How do you manage something like that? And how do you bring traffic to Texas Exchange?
I think I could start with the second part of your question. I think 24/7, I don't know. Again, Nicole Chambers speaking, not Texie. It's going to be really difficult. First of all, aftermarket trading, the spreads are really wide. Price discovery is difficult. Not enough news or too much news. What is the opening price now? What is the closing price? Really, 24/7 benefits international traders, so for those that are in APAC. But I don't know if it's really going to benefit the company and or a normal institutional investor, to be honest. If you think about, and I'd welcome your thoughts on this, Alan, but I personally don't see a benefit in 24/7. But if that's where the market goes, that's what we will do. We were going to follow the market. I do think the SEC and others are going to have to put up some guardrails, though, because it's a very difficult spot. You're going to have a CEO watching their stock up and down at midnight, and what good does that do? From an arbitrage perspective, I don't know if I can answer that directly, but, our markets are really efficient. Even though people think that there's malintent or malicious trading happening, it is so rare. It is unbelievably rare. The markets are truly as efficient as they can be. They're so transparent, almost to a fault. It's very rare when you see, something truly malicious happening in that respect and difficult. I think you have to just trust the process, and we are creating liquidity not only because we have to, we are paying them to come trade on us, they're invested in us, we're making every single effort possible, but at the end of the day, proof is in the pudding. I have to prove liquidity before I get a single listing.
Of course. All right. Thank you.
My only comment would be that I think that you're spot on regarding 24/7. I see very little upside to it. I see the attraction, particularly at a global scale, to be able to access global markets, and so you're no longer being penalized, if you will, by your domicile. But there's a reason too that the U.S. markets are the widest and deepest in the world. I mean, that is the benefit that we have both in the equity markets and in the fixed income markets. And I don't think you're necessarily going to see an improvement to market dynamics by virtue of having it 24/7. If anything, I think it's going to it's going to create some challenges
Absolutely.
ultimately.
Our last two questions here. Yes, sir.
Nicole, Alan, thank you both for coming tonight. Regions Bank, thank you for sponsoring this. I know I don't work for them. My name's Kevin Wilson. One of my roles is working with business owners as a Vistage chair. One of the things that's talked about, and my new friend Bobby and I talked about this, he's the creator of the Texas crypto coin, in case y'all don't know him yet. Quantum computing. We are probably where today with quantum computing where we were with AI 20 years ago. So how do you see, like, one of the words on the street is when quantum computing hits, Bitcoin, crypto coin will no longer have any value because you'll be able to snap it, get into it, and take all you want. So is there a fear of that happening in the stock markets?
You stumped me here. I don't know. I don't think I have an answer to that. I mean, Alan?
I don't have an answer for, I mean, I think by that point in time, the dynamics will also change in terms of the structure and framework around how trading is working, you know, and access to those. So it's a big hypothetical. I don't have a good, I wouldn't go on record on it.
A quick follow-up. Is there any way to keep politicians from doing insider trading through Texas?
But I will say, to Nicole's point earlier, one other aspect of this we've talked about, like from a power perspective. So for perspective, I was talking with the head of Blackstone's digital AI and data center group last week, and he said, so right now it takes 10,000 times more power to create a virtual image, AI image, than a Google search. So for all those cat videos and virtuals you're doing out there, but it's sucking. But when you think about quantum computing, and the ability, like how we get to that level, the amount of power we're going to need to ultimately get there, I think we've got a host of other challenges from here to there before we get there.
I'm hoping TXSE IPOs on TXSE and my stock is vested and I am on an island somewhere at that point. So, you can figure that out.
Awesome. Thank you.
Okay, our last question.
Hi there. Thank you. As my friend mentioned, Bobby Gray, Texas Coin. You talked earlier about making it easier for small and medium cap companies to go public by reducing things like costs and time and red tape. Do you have any basic metrics or ballparks for what those reductions could look like?
We're thinking about it from every angle. Is it one less earnings test? Is it a year's less worth of financials? Is it allowing for alternative? I think for us, we can minimize we can have the same risk, but maybe minimize some of the requirements. We are working through that. So with our Form 1 that was just approved, our amendments will start to get filed with the SEC, which will actually showcase exactly those standards and those requirements. So until those are filed, I can't say them publicly.
Thanks, Nicole.
But that is how we're thinking about it. Okay, real quick.
Yes, I started, I'll end it, okay? Regions, I suppose Region's going to be on this TXSE?
Oh, yeah, well, of course. Why do you think he's here?
I love it.
Okay, that's settled now. My question is, actually, I'm asking for a friend.
Is the friend you?
Not really me, but anyway. The question is, we had Boston Stock Exchange and Philadelphia Stock Exchange, and they got bought over. So what is the path for TXSE?
Well, if you think about regional exchanges in the past, it's because you had to trade where you lived. So if you were in, Kansas City, or you were in Chicago, or you were in the Northwest, you had to be able to access trading where you were. And then eventually it all kind of migrated to New York, and they traded, and they had the actual, people going up and down with the stocks and, armed guards making sure it was efficient, because that was just the only way you could do it. Now it's as I said earlier, it's completely decentralized. Trading is in a flash of a second, and it's decentralized out of New York. Our ambition is to be a true competitor to New York and NASDAQ. Boston, Philadelphia, SIBO, they're not a competitor because that's not their focus. They're not focused on corporate listings. SIBO tried it. They didn't win. They've closed their doors on the corporate, but they're a fantastic options and commodities trader. That is not our business. Our business is corporate listings and ETPs. So we have really high ambitions. We have to prove ourselves. We have a gigantic shoes to fill when you think about New York and NASDAQ having been around for 230 years and 50 years. But I absolutely see us being here 50 years from now having a conversation about how successful a new startup exchange has been. And again, if we can make doing business cheaper and better, we've done our job, even if you don't list with us. But you're going to list with us because I'm going to make you, especially you, Alan.
That's right.
So that's a great ending. You know, I have to confess, I'm not a big fan of audience Q&A. But tonight's audience questions were, I think, about as good as they've ever been. I want to thank everyone for bringing your questions. I want to thank Alan and Nicole. It's been, I've learned so much. So thank you so much for coming, and we'll see you all next time.